Welcome back. We're off to Australia, and the Parliament is likely to agree today on delaying a vote on the carbon emissions trading plan. Let's get more on this, and Heidi Cooch joins us with the latest from Sydney. Heidi.
Susan, well, Australia was due to introduce a carbon emissions trading scheme next year, but now that's been put on the back burner. It's good news for some of Australia's biggest mining companies, for example, Woodside Petroleum, but not such good news for some of the emerging clean energy companies. One of those companies is White Energy. It's patented a technology of drying up high moisture coal into bricks that generate 35% more energy. And it's now joined the largest US coal producer, Peabody, to expand into China. I'm joined now by John Atkinson, the Chief Executive of White Energy. Now, how do you feel about the carbon emissions trading scheme being delayed in Australia? How's that going to affect your business?
Oh, Heidi, look, it won't really affect our business, but it is disappointing because what I think companies want is certainty. And certainty then, drives investment. And for companies like us, investment's a terrific thing. It's a pity the Australian Parliament decided to opt the way they did, but they have, so let's move on. What we would like as a company, because we operate on a global stage, is certainty in markets around the world. For us, carbon emission trading systems are a fantastic thing, and the quicker they come in, the better it is.
And speaking of that investment, Peabody have an option to buy a 15% stake, and you plan to use part of those funds to move into China. How big do you see the China story? Do you see them as one of your main customers moving forward?
Yeah, the China story for us is fabulous. We've actually been working in China for the last 2 or 3 years. We've got an office in Shanghai, and the opportunity for us with Inner Mongolian coal in particular is sensational. It's a huge coal basin. It's high moisture coal. We can upgrade that coal and create from a low energy, low cost product a high energy and very valuable product for the Chinese market.
Hey, John, as Heidi mentioned there, Peabody, your tie-up with Peabody enables Peabody to have this option of buying 15% in White Energy. Do you think they're going to exercise that option?
Yeah, Susan, if I was Peabody, I would. But what happens is we've got a wee bit to go with Peabody. There's some further work we've got to do on finalising our arrangements, but I'd say in about 6, 9, maybe 12 months' time, when that's all set and we're working together on projects in the US, I think they'd be very eager to.
Okay, well, recently you merged your Southeast Asian, business with ASAC, which is this US-listed investment company. Do you plan to seek funding from other companies or elsewhere? And if so, where are you targeting? What are you thinking of?
Look, a business like ours is pretty capital intensive. We're building plants around the world. We're just about to finish the first and the world's largest clean coal facility with our good partners, Bayan Resources in Indonesia. And that plant, when operating, we envisage really exploiting and leveraging that opportunity around the world. We've set up, if you like, a bit of a land grab around the world. I think we've got almost 60-odd million tonnes of capacity contracted in one form or another with entities in the US, with entities in Africa, with entities in even in China, and of course Indonesia with Bayan Resources, to build our facilities. Now the capex required for that is going to be significant. We're very optimistic we're going to be very attractive to equity markets, but more particularly we're confident that we're going to be very attractive to debt providers, and in fact are very advanced in those discussions as we speak.
And to your performance on the equity markets, I think your stocks surged more than 700% over the past 5 years, which has beaten the ASX 200. But this year I think it's down about 15% or somewhere thereabouts. So has that rally come to an end? Have you lost the support of investors, or is this just a little blip in the radar?
Yeah, Heidi, on the contrary, actually, I think like a lot of companies, we've suffered at the hands of the market woes, but we've just had a placement which was, I believe, 4 or 5 times oversubscribed. We're looking to raise just $30 million. We raised $55 million. I think we had demand over a 12-hour book build period for over $100 million. And much of that demand came out of the UK, some out of Australia. We didn't even bother tapping the US market because by the time they woke up, we were filled. So for us, I think it is in fact the contrary is correct. I believe that institutional investors are very enthusiastic about what we're doing. You've got to remember with us that we're really a unique beast. We're a clean coal company, but we're a now technology. And that now technology means that we are about to start production, and we generate revenues by the end of this year. And that's very attractive to the investment community.
Susan here. We're running out of time for this interview, but let me just ask you about, you say that your big opportunity is in China, and it seems to be the trend that Chinese companies are looking to Australia for natural resources and these miners and something to get, to secure energy supplies. Have you been in any discussions at all with any maybe Chinese partnerships or tie-ups or mergers?
Not on the merger front, but absolutely on the partnership front. In fact, we've in a feasibility study with Datang International Power, who, as you know, Susan, I believe the second largest utility company in China, and we're in discussions with very large petrochemical groups in China about coal gasification initiatives. So the Chinese market is incredibly attractive to us. But of course the US market is also a sensational opportunity for us because that's the biggest high moisture coal market in the world, and we're very keen to tap it.
Okay, John, good luck for the future. John Atkinson of White Energy.